Hello everyone and welcome back to the channel, Finance with Ian. My name is Ian and today we'll be going over the 5 best investing strategies. All the strategies that I'll mention in this video are backed with data to prove that they're good strategies, and I use some of these as well. I know there are plenty of investing strategies out there and there are possibly ones that are better than the ones that I use, but these are basically the ones that I trust the most. After all, your long-term investments need as much help as possible in order for you to hit that retirement goal. You might as well go with the techniques that work out the best. Before we begin, do me a favor and scroll down a bit and drop a like to push this video to a larger audience. If you like what you see, consider subscribing since it greatly helps out my channel and it will keep you in tune for more financial videos in the future. With all that said, let's get into the top 5 best investing strategies. So to basically summarize the 5 best investing strategies, you're going to want to put all your money into Dogecoin, Bitcoin, AMC, GameStop, and Rocket. Oh sorry, that was from my Wall Street Bets journal. Okay, but for real, don't actually invest like that because you'll probably end up with a portfolio that's super volatile and you'll be in the red a lot of the days. Invest in something that has promise instead of hype. That brings us to our first investing strategy, and that is growth investing. What is growth investing? Well, growth investing is like going back 10 years and investing in Tesla when it was worth $17 a share. However, since we don't have time machines, we got to settle for the next big thing. And that's kind of what growth investing is. So growth investing is looking into companies that have huge upside potential, but are still small enough so you can buy a lot of shares. There's one big note I want to make here, and there's a difference between speculative investing and growth investing. It's the same thing as saying that there's a difference between a penny stock spiking and a small company that's starting to scale up because of their business model. So when you're a growth investor, you're looking at the current price of the stock and evaluating the potential of the company in the future. When you are a growth investor, you're also taking a look at the sector in which your company you're investing in. For instance, the technology and AI sector is super hot right now, and it's predicted to grow rapidly over the next few decades. And it's data like this that leads growth investors to believe that these sectors will grow even bigger, and therefore they begin investing in them. So what are some pros and cons of growth investing? Well, one of the pros is that you just might find the next Tesla. Another pro is that the companies you're investing in are fairly new, and because they're so young, their stock prices are pretty cheap, so you can buy multiple shares. This is the best way to get a good amount of equity in a company for pretty cheap. Then, once the company begins to grow in the future, you start reaping off the benefits. While this is great, you also have to listen to the cons of this style of investing. One setback is the lack of dividends. Because these companies are so new, they can't afford to give out dividends to all their shareholders, and instead reinvest back into the company. Another setback is that just other trading strategies work better than growth investing. One, for instance, is value investing, and we'll get to that later in the video. Another con is that growth investing usually works inversely with America's GDP. The reason why this is a con is because America has a strong economy, and because of that, growth investing usually does not do well. The last setback I want to mention about growth investing is that when there is a stock market crash, the first ones to crash are usually the growth stocks, and they fall pretty fast. One example of a growth stock that I'm invested in goes by the ticker symbol PLTR, or Palantir. I see it as a company that will grow massively over the next 5 to 10 years. While it is a long-term hold, I still consider it a growth stock because of the upside potential. I own many shares of Palantir, and whenever it dips, it just means I buy more. For our second type of investing, we have value investing. Now this is the strategy that the infamous Warren Buffett used. It's really incredible when you realize that a good amount of Warren Buffett's profits came from value investing. What is value investing? Value investing is a lot like going to a garage sale and finding a shirt that's selling for $3. However, if you look at the price on Amazon or anywhere else, it says the shirt is selling for $100. So then you buy the shirt and sell it at a higher price. So basically with value investing, you're finding stocks that are undervalued or for sale and then reselling them when they're higher. Some people use the simple PE ratio to see if a stock is undervalued, or they go further in depth on the finances of the company. One thing I will note about value investing is that it's a long-term game. Remember the quote from Warren Buffett, "The stock market is a way to transfer money from impatient people to the patient people." When he said this, I really believe he was targeting value investors. Value investing is way better if you're doing it long term, and it's mostly because you're depending on the company to actually succeed and not just the stock price to go up. There were several companies this month that listed Berkshire Hathaway as a value stock. In short, value investing takes place over several decades with a company you can get behind and has good business models. For our third type of investing strategy, we have dividend investing. Now, dividend investing is a great strategy for people who are in low income tax brackets or if they're in retirement. Let me explain why. Some stocks have dividends, and dividends are just what the company pays you just for holding the shares of the company. Sometimes these payments can be 1 to 2% of how much the stock is actually worth. It can go up to 6 to 7%, like the Alltrade Group. Now, you do have to be careful with dividend investing for a few reasons. Now, some companies pay high dividend rates just because their businesses aren't doing so well, and they want more people reinvesting back into the company. As a result, they pay high dividends to attract new investors back into the company. So just because a company pays high dividends doesn't mean that you should invest in it. Make sure you're always doing your research in whatever company you invest in. Another downside to dividend investing is that it's not a good strategy if you're making a lot of money each year. You see, unlike stocks which are taxed at capital gains rates, dividends are counted as taxable income. So dividend income is basically like your job income. So if you're already in a high tax bracket, you're going to be paying a lot of taxes on those dividends. Like I mentioned before, I'd recommend investing in dividends if you're either in a low income tax bracket or you're in retirement. That way you benefit most from dividend investing. Personally, I own some REIT ETFs, which are basically stocks and real estate. These are my highest dividend paying stocks, with the highest one giving me about 3.5% each quarter. It's always nice to add a little extra money to your portfolio, and dividends are a great way to do that. For our fourth investing strategy, we have index and ETF investing, which is also sometimes known as indexing. Now I know, this is not the Chad version of investing. It won't make you a millionaire overnight, but it is a great strategy if you want to retire in a few decades. With index investing, it is exactly what it sounds like. You invest in ETFs or indexes, or something that tracks the entire market. I do have to admit that I love this type of investing. It's pretty simple. You just add some money to your account and either buy SPY or VOO. There's no worry if the stock suddenly dips, because just like value investing, this is also a long-term technique. You see, as the stock market grows over time, your investments start to get bigger. Now I do a lot of this investing, not only my Roth account, but also my regular brokerage account. There are a few downsides to index investing, but I don't think they're too bad. One downside is that you have a lot of money locked into a position. If you want to see some real growth, you're just gonna have to put that money in there and let it sit. You'll also have to keep contributing to it. Make sure this is not money that you need in the short term, because this has to sit for a while. Another downside is that it's just flat out boring. Honestly, it just feels like you're putting money in a savings account instead of being that Chad investor on Wall Street. However, there is no denying that this is probably the best strategy when it comes to investing. Slow and steady wins the race, and those are the words I live by when I invest. Now the fifth and final investing strategy we have in this video is smashing that like button and make it turn blue. Okay, now that we have that cleared out of the way, the fifth type of investing is momentum investing. This is closely associated with technical analysis. In the world of stocks and trading, many investors believe that patterns are repeated on stocks. These patterns basically forecast which way the stock will head in the near future. Take a look at this pattern called the symmetrical triangle. I have used this one in the past, and although it's not perfect or always right, it's a great one to predict which way the stock is moving in the short term. In my experience with technical analysis is really good for the short term, because over the long term, there could be big news on the stock that really disrupts it. So what is this type of investing? Well, it's a strategy that takes a lot of time to master, and you gotta study a lot. You have to keep your eye on many stock prices throughout the day, and if you see something that's worth going after, you have to capitalize on it. For instance, if you see the pattern that I mentioned earlier, and it predicts that the stock might shoot up, a momentum investor might buy more shares on margin, or they might even buy some call options. Or if he has the capital, he just might as well buy more shares. Or vice versa, the triangle may predict the stock to go down, and as a result, he'll sell any shares he has, or short the stock. If you short a stock, it basically means you're borrowing someone else's stock, selling at the current price, and then buying it back for the person you borrowed it from for a small premium. The idea is that you're basically selling high and then buying back in when it's low. Now, I used to invest like this in the form of day trading. Let me tell you guys, I did not like this form of investing. I tried this strategy for about 2 months, and on days that were green, I felt like I was on top of the world and the best person on Wall Street. However, on the days that were red, I lost a lot of my portfolio. It's a risky way to invest, and I'd recommend investing using the 4 other strategies that we mentioned earlier before you invest with momentum trading. Not only does it take time out of your day to watch all those stock prices, but the short term is really not your friend when it comes to investing. Remember what Warren Buffett said: the stock market is a way to transfer wealth from the impatient to the patient. So those are the top 5 investing strategies that I know of. I like indexing and growth stocks the most, although dividend and value investing are also great. If you guys have any other investing methods that you know of, drop it down below and share it with the rest of us. I do want to make a disclaimer, I'm just a random guy on YouTube, so make sure you talk with a real financial advisor before using any of these investing strategies. So with all that said, thanks so much for watching until the end of the video. Make sure to scroll down a bit and drop a like to push this video to a larger audience. If you liked what you saw, please consider subscribing since it greatly helps out my channel, and it'll keep you in tune for more financial content in the future. I'll see you guys later, and thanks for watching.